Cathie Wood will talk in depth about the current market conditions and give you all a lot of useful information about how the federal government plans to spend the money it saves on tax cuts in the future. We've been in a rolling slump, and she thinks the market will become very bullish in the future. All of this will be very helpful for all of you back home. Let's not wait any longer and hear what Cathie has to say. Also, this slide is very important. There will be more money coming in when taxes are dropped if they are too high. This is what the Laffer curve looks like. Why does that take place? Business and people no longer use tax loopholes and other ways to dodge paying taxes. I didn't say stay away. That is not okay. I told you to avoid taxes and find ways to get around them. Here you can see how the business tax rate has changed over time. That's the black line there. It's clear that things have changed over time since the early 1000s, 900, as we've had different income tax rates. This isn't new then. Also, until the late 1800, these tax payments weren't kept very well track of. It is clear that tax rates have dropped a lot in the 1960s, 1970s, and 1980s compared to the early 1900s. A record high amount of tax money is coming into the government. What does this have to do with Bitcoin and why is it so important? Low tax rates tend to boost growth, and people pay their taxes more often when they do. A lot of you have asked this. I'm going to answer your question now. There's no doubt that lower taxes help the economy grow and get things going. I'd like to show you this picture one more time. Why is this important right now? Donald Trump wants to lower taxes even more because trade money is coming in. He can afford to do this, and it's likely that the federal government will give more real business income taxes, which is huge. This means that fewer people will avoid paying taxes, which means the government gets more money. It said something big was going to happen, and you can see the growth. It is totally crazy. Around this area in the middle of the 2010s, taxes went down a lot and then went up a lot. The real amount of business taxes paid went up from 200 million to 500 billion, which is a huge increase. A lot of money this way. That's a crazy rise. It doesn't make sense for that to grow by almost 3 times in just 5 or 6 years. That's right. It's clear that business taxes were very low in the 950s, even though they were the highest they had ever been. It's too bad there aren't any numbers for the 920s and 940s, but this is still very important to remember. Right now, we're in a rolling recession, but I think we'll be speeding out of it very soon. I also think this will be a big day for the cryptocurrency market. It's interesting to me to think about what Cathie would say about this and what she and ARK Invest think will probably happen in the markets. Come play. This quickly, a lot of businesses got in touch with us in the first quarter. There may be a lot more calls from businesses in the second quarter. Taxes in the budget have stopped some spending while people wait to see what happens. A lot more people are likely to talk about the downturn. As we try to show in the letter, many economists and strategists may be talking about the start of a recession. However, we think that the last sectors to give way are the ones that have been keeping the economy going for the past 3 years, bringing us positive GDP growth and, more importantly, job growth. The government and wealthy people. The government hasn't had a slump like this in 30 years. There had been no government work for us since during the Clinton years. Gingrich made Congress smarter about how it spent money. So let's start. The Fed funds rate is shown in this picture. This is one reason why we talk a lot about this rolling recession and have for the last few years. The real Fed funds rate, which is shown by this purple line, is the rate the Fed wants to see. It's pretty much the same as it was in 2007 and 2008 before the great financial crisis. It's just beginning to fall over, as you can see. The most important part of this picture is what you see in green. This displays how quickly the Fed funds rate changes. In 16 months, the Fed raised rates 22 times. From the beginning of 22 to the beginning of 23. This proves that. after 16 months, this has never happened 22 times in history. There has never been anything like this in the history of the Fed funds rate since 1913. We're going back to or through the 1970s. A lot of people have laughed us off by saying, oh my gosh, we were starting from 0.25%. It doesn't really matter. The rate was very low. Even though it was a very low rate, people around the world, especially in the US, were used to them after 207, 207, 2008, and 209, 2010. This big jump came as a surprise. We take a look back at the years 87, 70. Over time, people got used to rising prices and interest rates and changed how they lived. When choices were made, they taking inflation into account in a big way. A lot of choices are made with interest rate hikes in mind. That wasn't true this time. That was a big surprise, and we think it was the start of the slump. Plus, we'll talk about how that rising trend looked. Finally, let's talk about money policy one last time. The speed at which money changes hands is called its speed of money. It has been going down since the late 1990s, when the tech and telecom bubble was at its peak. A lot of new technologies were made possible by that boom. These technologies have helped keep prices low for the next 20 to 25 years. Then CO came along and slowed everything down because everyone thought the world was going to slow down. That's why there wasn't any money spent. When the economy and money got a big boost after that, both growth and the flow of money sped up. If we're right, though, the speed of money will change again here. In fact, it has already done that. It went down in the first quarter. Between the fourth quarter and the next, it was pretty flat. The change from one year to the next was about 1.4%. That makes sense, but if the number drops one after the other, it will put stress on the number that changes from year to year, which will slow down the whole process. A lot of money is lost because of that. There isn't much the Fed can do here. The market finally gets it, and they now expect the Fed funds rate to stay the same, to be cut 4 times this year. That being said, this is very important information because today one of these 4 cuts could happen. If they do, it will be a big deal. In other words, we can already see what happens in Europe when rates are dropped. Anyway, they did this a few weeks ago, and now the markets are starting to show that the money supply usually starts to rise 6 to 8 weeks after a rate cut. Of course, this makes more people want to spend. The price of XRP has changed because of this. A lot of times, Bitcoin and other digital assets, if these 4 rate cuts happen this year, they could cause pretty big price changes across the crypto market, maybe even bigger than what you'd see if rates went down in Europe and China. There is a lot of money in the US economy and in cryptocurrencies. This means that more money in the hands of Americans means more money is likely to move into XRP, all cryptocurrencies, but especially Bitcoin and American ones, because Americans like to buy American goods. These are the only ones I'm looking at right now. XRP and HAR, that's why I'm so happy about the economic boost. This is the exact reason why I'm trading around it too. Those are the things we